Hi, it's Michael Farr from Farr, Miller and Washington. The big news in the markets this week came from the hedge fund manager David Tepper, who said, "Don't be short, but don't be too freaking long either." His quotation, "Don't be too long" suggests that investors should be cautious. As the market has been making new highs at the beginning of the week, I think the sentiments were cheering and fearing. Cheering for those who had been patient and disciplined in staying invested and enjoying the returns from these new high levels. And yet a bit fearful, because if the old rule is to buy low and sell high, this ain't low by anybody's imagination. Don't forget that things that are high can indeed move higher. More broadly, a lot of the economic recovery, in our opinion, has been fueled by lots of government dollars, both on the monetary side in the way that the Fed has created over $4 trillion on its balance sheet, and on the fiscal side through over $5 trillion in deficit spending over the past 6 years. We've now taken $5 trillion on the fiscal side, over $4 trillion on the monetary side. We've taken $9 trillion and shoved it into basically a $15 trillion economy to result in 2% GDP growth. While the data are improving for the U.S. economy, it's not robust, it's not breakout, and it's not runaway. Why? Because it's not being driven by the consumer. And we saw Walmart's earnings come in this week, and they were lower than expected. Walmart is the bellwether for the U.S. consumer, for the health and well-being of the U.S. consumer. If the consumer has money in their pockets, they spend it at Walmart, by and large. But they aren't earning more money. They don't have many more jobs at all as a whole. And they haven't really seen any increase in wealth. The consumer spent more money over the last 3 quarters, but without more wage gains and growth, and without really more jobs, where's the money coming from? They're putting it on their credit cards. And we saw the savings rate decline. That's not sustainable for consumers just to keep borrowing to spend at Walmart. So the recovery is occurring. As it occurs, we think it's going to continue to be tepid and modest. But look, we're moving in the right direction. Don't despair. We agree with Tepper, or should I say Tepper agrees with Farr. You should be cautious. We own really good, high-quality blue-chip stocks. That's our goal. Our analysts are reviewing them every day, all day long, going through balance sheets and income statements to make sure that they don't have too much debt, to make sure that earnings are increasing, to make sure that the returns on equity are there, and that cash flow is strong. So don't despair. It's not that bad. Don't get overly ebullient either. Always be cautious. And if you need a little help, call us at Farr, Miller and Washington. In Washington, D.C., I'm Michael Farr.